My trading bot told me to pass on the trade. I didn't listen. 3 hours later, I was up 3,200. Let me show you how I read the charts myself. Welcome to the Heavy Return Show. I'm Flo. This is episode 1, hopefully one of many. The purpose of this show is to educate beginners in the stock market. So if this is you, then you probably want to tune in. I'm going to discuss 4 major companies that report earnings this week, the trade that I was talking about earlier. We will take real questions from my Discord trading community, the heavy hitter of the week, and also a couple of other core concepts that you need to tune in on. And finally, we will announce our very first heavy hitter of the week. Guys, I'm so excited for this show. Y'all stay tuned and follow along. Now look, Memorial Day is Monday, so the market is going to be closed. We still have 4 other trading days this week. Our first segment is pre-workout, pre-market. Working out is just like trading. They both require discipline and routine. Now, when you're getting ready for the gym, you're going to grab your clothes, grab your headphones. You may even take a pre-workout. After that, you head to the gym and then you lock in. Well, trading's no different. We want to look at any relevant news, any technicals, and any other sources of information that we can before the market opens. That way we're prepared. Pre-workout, pre-market. Now, before I tell you what to watch, let me tell you how I watch it. There's 3 things that I look for on every single earnings report. Number 1, the income statement. Did they make more money? Number 2, the balance sheet. What they own versus what they owe. Number 3, the cash flow statement. Now that is the real number because that shows you how much cash they have left. Is the cash real or is the company just playing financial gymnastics? Now this week, we're going to focus on 4 major companies that are dropping earnings. There are plenty more, but I think that it's probably important that we focus on this 4 for this particular episode. 3 of them report Wednesday after the bell. That's Snowflake, Marvell, and also Salesforce. Then Costco reports on Thursday. Salesforce, ticker symbol CRM. Every Fortune 500 company uses Salesforce to track their customers, their sales, and also their pipeline. It's on a per-seat subscription model, which means the more employees that they have, the more money that Salesforce makes. But here's the catch. They're betting that companies will begin to shift to having agents and getting rid of their employees. What they developed was Agentforce. Salesforce wants to begin agentic AI to supplement their income in the event that companies shift from actual human employees. With Agentforce, customers will buy agentic work units instead of seats. Salesforce had a big beat last quarter. Revenue hit about $11 billion and their subscriptions went up 13%. Now that's the fastest growth this company has seen in 2 years. But here's the catch, the stock didn't rally. In fact, it's down about 35% this year. Why is that? Well, Wall Street investors are actually concerned about the agentic AI that Salesforce is putting out. You have competitors such as OpenAI and Anthropic. Anthropic released Cloud Code and OpenAI released Codex. These things have caused major concern for Wall Street investors because they believe that there's going to be a disruption in Salesforce's system. But for now, we're going to focus on the financial statements that we currently have, and Wednesday will be all ears. Let's tap in. What we have is the income statement, which is going to tell us how much money was brought in, minus the cost of actually doing business, and at that bottom line is going to be our profit margin. So at the end of 2022, what they recorded for the first quarter in 2023 was $31 billion in revenue. That is amazing. We're going to skip over to 2025 where they reported $41.5 billion. So that's about $10 billion in revenue that Salesforce has brought in a matter of 3 years. Their cost of revenue was 8.3 back in 2022, and now it's currently 9.2 billion. So that means that their cost of revenue only went up by $1 billion in the span of that time. So despite them getting $11 million in revenue, their cost of doing business only went up by $1 billion. I think that that's something to pay attention to. Next up is the balance sheet. Balance sheet always show you what a company owes versus what they own. We want to be aware of total assets versus total debt. For 2022, Salesforce had $98 billion in assets and $14 billion worth of debt. That is a pretty healthy margin. Skipping to 2025, their total assets increased to $112 billion, and then their debt only increased to $17.1 billion. Again, they've showed that they have sufficient assets in comparison to their debt. Salesforce is a pretty healthy company. Finally, we have the free cash flow statement. The free cash flow statement is going to show us if the cash is real or not. This is a number that you want to see increasing over time. If you see that, chances are that you have a company that's probably improving on their health or they're already healthy. 2022, Salesforce had a free cash flow of $6.3 billion. Skipping over to 2025, that jumps up to $14.4 billion. What that means is they've doubled their free cash flow span of 3 years. That is amazing progress. So we're showing a company that has low debt, a company that's increasing their free cash flow, and also a company that has increased their revenue over time. I'm really liking Salesforce. But what we want to pay attention to on the earnings call is the agentic work unit consumption data. Last quarter, Salesforce delivered 2.4 billion AWUs. The question this week is, does that number increase or does it decline? That's the full breakdown on Salesforce. If you want the same breakdown on Snowflake, Marvell, or even Costco, that video will drop Monday before the open. All you have to do is subscribe to this channel to watch it. That wraps up fundamentals. This next segment is called Inside the Rep. That's where I focus on technicals and actually learning how to trade based off the candlesticks and charts. So I developed a trading bot that alerts me when certain parameters are hit. On May 21st, I received this alert from my trading bot. This particular trading bot alerted me to the SPY 740 call with the date expiration of 5/21. So yes, this was 0 DTE. This particular contract was expiring the same day that I would trade it. Now, they told me that the sweep activity suggested aggressive accumulation, but the trading bot told me to go ahead and pass. These alerts don't come often, so when I get them, what I like to do is I'll jump into the charts and then break it down myself to see whether or not it's an opportunity. What I saw was a bullish trend with prices coming down, testing support, and then I saw a lot of activity around the VWAP. In addition, I saw a ton of exhaustion above that support line. So what I did was I entered at VWAP for a call. I took the 739 call at the money. I purchased 10 contracts. Each of them cost me $152. You're saying to yourself, I only see 1.52. Well, you have to remember every options contract, you want to multiply that times 100. That's 152 per contract. I purchased 10 of them for a total of $1,520. After entering, placing my stop loss, I had 2 take profits. Now you'll see here that price actually touched my stop losses, but when I'm day trading, those are mental stop losses. When price touched these particular point, it didn't close under it. And if it had closed, I would have closed out. But because it didn't, I actually stayed into the trade and I'm actually happy that I did. With this being a call, I'm going to make money as price increases. Look at my pricing screen and you'll see the price jumped up to $4.73. Remember, you have to multiply that times 100 to get the actual value of one contract. So that's not $4.73. That's $473 per contract. I purchased 10 of them. Remember, the original 1,500 that I put into it jumped up to 4,700. That's a nice, pretty profit margin based off of the alert that my trading bot gave me. But again, remember, if you're going to have these trading bots, don't let them be gospel. You want to pay attention to them, but you want to do your own analysis to ensure whether or not it's wrong, or even sometimes if it's right, or whether you should pass it all. Just remember, sometimes these scanners can help you think about opportunities, but don't let it be why you take the opportunity. So with that trade, I made $3,200 in 3 hours, or about 200%. Day trading is fun, it's exciting, but it's also risky. I wouldn't suggest it for any beginners, but if you want to learn, again, you can always join our Discord. I will place a link in the description. I want to jump ahead to the long game, okay? So this next segment is called the meal plan. Kind of like the meal plan where we prepare our food and we know what we're going to eat throughout the week. Well, my meal plan is how do we get to $1 million over time? The whole goal is to have our money make money and then have that money make even more money. It's all about compounding. I'm going to discuss 2 different mechanics with you. So first, we have dollar cost averaging. Dollar cost averaging is the practice of determining an amount of money that you'll dedicate to investing every single paycheck that you have. For instance, if you want to put aside $200 every single paycheck, you can automatically deduct that from your bank account and then have it invested into whatever it is that you like. With dollar cost averaging, the focus is not timing the market, it's actually time in the market. You just keep pouring in a little money and over time that will compound. After that, you want to activate what's called DRIP, your dividend reinvestment plan. Many companies on the stock market issue out what's called a dividend, or you can call it profit sharing. They'll pay you just for holding the actual company. Instead of you getting that check and you going off to spend it somewhere else, if you activate DRIP, you'll reinvest those profits into you buying more shares, making your snowball even bigger over time. That is where money truly compounds. Here's the trap that most people fall into. They try to build the day trading account before they build the long-term account. It's almost like building a house without a foundation. You have to set a solid foundation before you can get to adding the frame and all the other things that go into building a house. If you need somebody like me to hold you accountable, just join our Discord. We talk about these things all the time. In our particular community, we will encourage you to eventually day trade, but we always make sure that you have the foundation set in place. Can't jump into the Ferrari before having the Toyota first. This next segment is going to focus on the community. This is called Spot Me. This is an opportunity for our members to ask me particular questions, and I'll answer them on every single show. This first question comes from Don. This question asks, do you recommend Schwab for investing or just for mainly trading? My response was, different platforms mean you won't transfer funds after a loss. Think of it as a safeguard. So essentially, Don's question was, can I have my day trading account on the same platform as my investment account? I advise against that. Reason is because whenever you lose these day trades or any other trades, you may be tempted to dip off into your foundation money, and you don't want to do that, because if you do that, then that money will never grow. I like for my members to separate their accounts, but that there's a safeguard in place so that they won't be tempted, because it's all about discipline and routine. It's really up to you guys on what platforms and how many different accounts that you want to have, but you want to protect your money. And in my experience, I've always performed better when my accounts were separated. Our next question comes from Piva the Boss. What about SpaceX and the 60 companies that haven't IPO'd yet? Those 60 companies are already on the market, and we just call them picks and shovels. I dropped a list of 60 companies that are benefited by SpaceX's IPO. Basically, his question was, were those companies going to IPO as well? Well, the 60 companies that I sent are already on the market. We like to call these companies picks and shovels, or companies that may benefit from a larger company just by doing business with them. The reason why I suggested these 60 companies is because we as investors refer to these companies as picks and shovels. The best example to give you guys is the gold rush. Back in the gold rush days, most people that searched for gold actually lost money, but it was the people that sold picks and shovels that made the most money. The companies that sold the materials to the people that were searching for gold. Same thing here. With SpaceX IPOing, there's going to be a lot of companies in the space sector that actually benefit from SpaceX's IPO. And that's why I dropped 60, because who knows, maybe some of those companies will become profitable companies, and I'll send it to you. Peter Lynch teaches this exact concept in his book, One Up on Wall Street. If you want to grab your copy of that book, all you have to do is to go to heavyreturns.com/library, and you just click the link. It'll take you straight to Amazon, and then you just check out. And if you have a question you want to ask me, just drop it in the Discord. The link is in the description, and I'll answer it on next week's show. These questions came from one place, my Discord, and this guy is the reason why. Here we have the very first heavy hitter of the week on the Heavy Returns show. Big shout out to my brother Don. His Discord handle is at BiggieSmallLots5918. Now, Don hit his first $1,000 day on options this week. It was Meta 598 calls. He ran it right through the bell and he exited green. Now, Don already knows how to trade because he learned it with Forex. But just 3 weeks ago, he started to learn how to options trade. He hopped off the bench, he set up his platform, he joined the Discord, he asked a lot of questions, and he started taking positions. He didn't let fear stop him from learning and growing. The quote for him was, "I got a long way to go, but I'm coming." Now, Don embodies what we want in our Discord community. He's there every day. He's putting in the work. He's looking at the charts. He's reading news articles, and he's asking questions. If you do what he's doing, I guarantee that you guys will be better in the stock market. So the whole purpose of this was highlighting this young brother and giving him a huge shout out and a congratulations for hitting his first $1,000 in options trading. Remember, he just started trading options just 3 weeks ago. If you guys put in the time and the effort like he has, then I guarantee you will become better. Shout out to Don, y'all. I'm so proud of my community. We already got people being profitable. With this last particular segment, it's called the core. Now with the core, we're going to break down one concept a week. These concepts will either save or make you money once you understand them. If you have ever bought an option, watched the stock go nowhere, and still lost money, that was theta or time decay. These are real numbers. Stick with me. You buy one SPY 580 call, and you have 30 days to expiration. You pay $5 a contract and you have $500 in. The stock stays flat at 580 the entire month, and then on day 15, the contract is now worth 400. You lost $100 doing nothing. Day 22, worth 300. Day 26, worth 200. Day 28, worth 100. Then finally on day 30, well, it's worth nothing. You lost everything. 500 to 0, the stock never moved. You were right, but again, you lost everything. If you sell options instead of buying them, then theta is your friend, and then the time decay would pay you. Pick which side of theta you want to be on. That's the whole game. If you want the full Greeks breakdown, Delta, Gamma, Theta, or Vega, I broke it all on webinar 2. Grab the free replay here and you can check it out. You guys always want to be aware of what your expiration date is and how Theta is going to impact your options contract over time. I'm not saying to trade things under 30 days because I personally trade SPY and SPX on 0-day expiration, but this concept is for advanced traders. If you're just starting out, buy yourself some more time. There's nothing wrong with you getting something that has a lot of runway for the trade to breathe in your direction. Okay, that's a wrap for episode 1. Just a quick recap. We did pre-workout, pre-market where we broke down earnings for Salesforce. We did inside the rep where you guys actually saw me take a trade. We did the meal plan where I broke down dollar cost averaging and also activating your drip. Then we did Spot Me where I addressed questions from my Discord trading community. We celebrated our first heavy hitter of the week. Shout out Don. Finally was the core, where I discuss theta decay. Next week will be more concepts, more trades, more questions, and also another heavy hitter of the week. Drop your questions in the Discord, the link is below. There's 3 places to find me. That's youtube.com/heavyreturns. You can join our Discord at heavyreturns.com/discord, or you can even get our newsletter at heavyreturns.com/outlook. All of these are completely free. After that, you just follow Heavy Returns everywhere. YouTube, TikTok, Instagram, and even Twitter. I appreciate everybody joining my first episode. We're going to continue to get better by 1% every single day, and I'm looking forward to the next time talking to you guys. Peace.